In this video, you're going to learn about the 7 best investments in Canada. Hey, how's it going? My name is Chris Liu and I'm the creator of Wealth Awesome. If you're looking for the best investment opportunities in Canada, you might be overwhelmed by all the different options. I must confess that the term best investment is a bit misleading. Instead, you need to find out what are the best investments for yourself. Your situation is unique and you have to figure out your investment goals and risk tolerance that are suited to you. Before getting started, here are 3 important factors before choosing any investment that you must consider. While there are a lot of different factors, here are the 3 things that I think are really important, and just to keep it simple, I left it at 3. So number 1 is the risk and reward of the investment. How risky is the investment as compared to how much money can you make with it? So for example, an investment that is high risk but has a high reward makes sense, but a high risk investment with low reward really doesn't make sense. Number 2 is the time commitment of the investment. Time is money. So if an investment will take up a lot of your precious time, you have to factor that into if you want to choose that investment. Number 3 is the liquidity of the investment. Liquidity means if you can sell the investment quickly. If you want to change your investment in the future or need the money for other needs, it's important to have high liquidity. Investment option number 1, exchange traded funds and mutual funds. At the end of 2017, investment funds in total account for 38% of Canadians' financial wealth. So that means almost 40 cents per every dollar invested by Canadians are in ETFs or mutual funds. But that doesn't mean you should invest in only those things. So since these make up such a big part of what all Canadians invest in, let's take a deep dive into both of them. So exchange traded fund, or an ETF, is a collection of stocks or other securities that are designed to track a certain underlying index. For example, you could buy a Canadian TSX index fund or a US S&P 500 fund. Tracking major indices such as these are the most common use of ETFs for investors, but you could also invest in a variety of different industries and markets. Be careful to be aware of the risks. For example, there are even marijuana stock ETFs, which are extremely risky. There are many different types of ETFs, such as an all-in-one ETF, where you could just purchase one fully managed ETF at a low fee, for example, Vanguard's VGRO. There's also bond ETFs and equity ETFs. So let's talk about mutual funds now. So mutual funds hires portfolio managers who will actively buy and sell stocks in an attempt to beat the benchmark index. So they're trying to outperform the market, basically. The fund company then charges a fee, usually in excess of 2% to its investors. So I used to work for one of the largest mutual fund companies in Canada, but I don't invest in mutual funds anymore for the simple reason that they are not proven to outperform the market after the high fees are taken into account. So that's why I don't choose mutual funds as my investment. But if you insist on choosing one over an ETF, the Vanguard mutual funds are a good compromise at a very low fee compared to other mutual funds. To learn more about ETFs and Vanguard mutual funds, you can read about the best ETFs in Canada or the Vanguard Canada overview that I wrote on my website, wealthawesome.com. To purchase ETFs, the cheapest ways are either using a discount broker such as Questrade, which has free ETF purchases, or a Robo Advisor like Wealthsimple. Investment option number 2, stocks. Compared to ETFs, buying individual stocks can involve a higher risk because your money invested will usually be more concentrated. Because you're just investing in a few different stocks, your investments could be more volatile with potentially larger swings in prices. So you gotta be a little more careful. If you're doing it properly, you'll spend more time analyzing and researching stocks before you purchase them as compared to an ETF. As a Canadian, I think it's wise to invest some stocks outside of the country to avoid what's called a home bias. But you should be aware of the extra fees that come with buying individual US or other international stocks. You'll usually be charged a foreign exchange fee to convert your money into the other currency. Investment option number 3, bonds. Bonds are commonly known as fixed income and are an investment that you could purchase that will generate interest regardless of how the market is performing. They are lower risk and less volatile than stocks and used to balance out your asset allocation between equities and fixed income. There are many different ways you can buy bonds, such as a bond ETF, which are very liquid and can sell on an exchange. There's also bond mutual funds, which are also liquid and you could sell, but it does take a little longer to process as compared to an instant ETF buy or sell. You could also buy an individual bond. This constricts you the most and is the least liquid, as they usually have a locked-in time of investment. My preferred method of purchasing bonds is using a bond ETF, as they don't lock up your money and have low fees. Investment option number 4, cash equivalents, GICs, and high interest savings accounts. For short-term purchasing needs, you can't go wrong with investing in cash equivalents. If you know you need to make a purchase within a year or two, putting your money in a high interest savings account or GIC is a no-risk way of earning some interest while you wait to make the purchase. High interest savings accounts have seen higher rates due to the increase in online banks in Canada, which offer higher rates than traditional banks. While GICs lock up your money for a certain amount of time, but they will offer slightly higher rates than the savings accounts. Make sure your money is covered by CDIC insurance, so even if the bank goes belly up, you'll still be okay. I don't bother with GICs personally. It doesn't make sense to me to lock in a low interest rate for the long term. For my emergency fund and short-term purchases, I use high interest savings account. And specifically, I use the EQ Bank Savings Plus account, which has a current savings rate of 1.7%. Considering that the Bank of Canada overnight interest rate is only 0.25%, that's a great rate. And it's a good way to keep pace with inflation and gives you maximum flexibility for your cash because you could take it out at any time with no penalty. Investment option number 5, real estate. Canadians love investing in real estate, but real estate as an investment is risky because you're concentrating your investments on one asset and it's usually with borrowed money. Although the Canadian real estate market has seen staggering growth in the years following 2008, there's no guarantee that it'll last in the future. Liquidity for real estate is low, meaning it would be hard to do a quick sale to get the money if you needed it. And during economic downturns, rents will decrease and it might be hard to find tenants for your real estate property. Now, I know many people have gotten wealthy from real estate investing, but know that it could take a high time commitment and a high risk tolerance to do so. An alternative to real estate is buying a REIT stock or ETF, which is more liquid and requires much less time commitment. Option number 6, Robo Advisors. Robo Advisor is a fancy term for an investment company that will buy and balance a basket of ETFs for you based on your risk tolerance and investment goals. You'll do a risk survey that will place you in a managed ETF portfolio. Because Robo Advisors operate entirely online and have low overhead, and they also purchase low fee ETFs, they can offer its services for a pretty low fee. These companies also usually offer advisors you could reach by phone or by chat and will automatically rebalance your portfolio so you're not straying too far from your investment goals. There will usually be additional features like tax loss harvesting during tax season as well. If you're new to investing and want to spend next to no time managing your investments for a low fee, Robo Advisors are a great option. Quest Wealth has the lowest fees for a Robo Advisor in Canada, and Wealthsimple is the most well-known. If you open an account with them, you can get your first $10,000 managed for free. Check out the description below. Investment option number 7, alternative investments. Alternative investments in Canada are not publicly traded and include things like private equity, hedge funds, private debt funds, and peer-to-peer lending. The liquidity is usually quite low, with many of these investments requiring locked-in periods where you won't be able to withdraw your money or sell your investment. Sometimes this could last several years or even over a decade if it's like a land deal or something. Investors choose alternative investments because they think that they could give them higher returns. However, certain alternative investments, such as hedge funds that can have massive fees, are not proven to outperform the stock market. Warren Buffett famously won a $1 million bet against a hedge fund manager that a simple ETF would outperform his chosen hedge funds over a 10-year period. If you're considering alternative investments, do your research carefully and see if the potential larger returns are actually worth the higher risk and time commitment. Here are my investment principles that work for me. Number 1, I don't want to spend too much time on investing. Number 2 is diversification is crucial, and also to purchase investments outside of Canada. Number 3 is to maintain a long-term and rational approach. And number 4 is to maintain low transaction costs and fees. I currently have an investment property that I Airbnb to tenants. Well, it's currently being rented out long-term now due to COVID. And I also invest in mostly ETFs and a little bit in individual stocks. These investments give me access to international companies. I have a manager for my investment property, so I don't spend too much time on it. I've also opened up a couple of different Robo Advisor accounts. Other than my Robo Advisor accounts though, I don't invest in any bonds, so it's 100% stock portfolio because I have a very high risk tolerance and a long time horizon where I don't need to touch my money for several decades. I don't recommend this for 95% of investors though. I think most investors should have some fixed income in their investment portfolio. I'll likely shift some of my money out of equities and into fixed income as I get older. What I do though is likely going to be very different than what is best for you. It's up for you to figure out what are the investments for yourself, and you gotta do the research. And I'm glad you watched this video because hopefully it helped you to learn a little bit about that. So make sure you like and subscribe to this channel. I'll be putting out new content every week. Also make sure to check out my wealthawesome.com blog. I go into a lot of detail, more so than these videos, and I have over 100 blog posts now, and it's one of the fastest growing blogs in Canada. Thanks for listening.